Bitcoin has had a wild ride. Prices have gone up, down, and everywhere in between. It's enough to make anyone's head spin, but one thing is clear. Bitcoin is here to stay. Some people got scared when Bitcoin's price dropped from its all-time high. They thought they missed the boat. But savvy investors know that every dip is a buying opportunity. Those who bought Bitcoin early and held on have seen life-changing returns. But it's not too late to get in the game. Experts believe we're still early in Bitcoin's long-term journey. Some predict Bitcoin could reach $250K, $500K, or even $1 million in the next decade. The potential for growth is enormous. Michael Saylor, CEO of MicroStrategy, says, Bitcoin is digital gold and it's the best store of value in human history. Kathy Wood of RA Invest says, Bitcoin could reach $1 million by 2030. Investing in Bitcoin can seem daunting. The cryptocurrency market is known for its extreme volatility, with prices that can skyrocket one day and plummet the next. For many, this unpredictability can be a major barrier to entry. The price swings can be intimidating. It's not uncommon to see Bitcoin's value change by thousands of dollars in a single day. This kind of volatility can make it difficult to decide when to buy or sell. That's where dollar-cost averaging comes in. This strategy is designed to take the guesswork out of investing. Instead of trying to predict market movements, you invest a fixed amount of money at regular intervals, regardless of the price. Think of it like this. Instead of trying to time the market perfectly, you invest a fixed amount at regular intervals. This could be weekly, monthly, or any other period that suits your financial situation and goals. Maybe it's $50 every week or $200 every month. Whatever works for you. The key is consistency. By investing the same amount regularly, you buy more Bitcoin when prices are low and less when prices are high. Let's say Bitcoin is at $65,000 one week and $70,000 the next. With dollar-cost averaging, you don't worry about these fluctuations. With dollar-cost averaging, you buy a little bit at both prices. Over time, this approach can help you build a substantial position in Bitcoin without the stress of trying to time the market. This smooths out your average cost over time. Instead of buying all your Bitcoin at a high price, you spread your purchases across different price points, which can lower your overall cost per Bitcoin. Remember 2023 and 2024? These years were marked by significant price swings in the Bitcoin market. Bitcoin's price went from $65,000 to $116,000, reaching new all-time highs and capturing the attention of investors worldwide. Then down to $56,000, causing panic and uncertainty among those who had bought in at higher prices, and back up to $70,000. These dramatic shifts can be nerve-wracking, but dollar-cost averaging helps mitigate the impact of such volatility. Dollar-cost averaging helped investors navigate those swings. By consistently investing a fixed amount, they were able to accumulate Bitcoin at various price points, reducing the risk of making a large investment at an inopportune time. This strategy can be a powerful tool for long-term investors looking to build wealth in the volatile world of cryptocurrency. What makes Bitcoin so special? One word: scarcity. But let's dive deeper into what that really means. Unlike government currencies, which can be printed endlessly, Bitcoin has a fixed supply. Central banks can decide to print more money whenever they see fit, often leading to inflation and devaluation of the currency. Only 21 million Bitcoins will ever exist. This cap is set in stone, or rather, in code. No central authority can change this limit, making Bitcoin a truly decentralized form of money. That's it. No more, no less. This finite supply is a stark contrast to traditional currencies where new money can be created at will. This limited supply is hardwired into Bitcoin's code. It's a fundamental feature that cannot be altered, ensuring that Bitcoin remains scarce and valuable. It's what gives Bitcoin its value. Just like precious metals, Bitcoin's scarcity makes it a sought-after asset. Think about it like this. Gold is valuable because it's rare. The difficulty and cost of mining gold contribute to its value. The same goes for Bitcoin. Mining Bitcoin requires significant computational power and energy, adding to its scarcity and value. As demand for Bitcoin grows and supply remains limited, its price naturally goes up. This basic economic principle of supply and demand is what drives Bitcoin's value higher over time. This scarcity also makes Bitcoin a great hedge against inflation. When traditional currencies lose value due to excessive printing, Bitcoin's fixed supply ensures it retains its purchasing power. When governments print more money, the value of your savings decreases. This is because the increased money supply dilutes the value of each individual unit of currency. But Bitcoin is immune to this. Its fixed supply means it cannot be devalued by inflation, making it a reliable store of value in uncertain economic times. Bitcoin is decentralized. This means no government, bank, or institution controls it. It's powered by the people, for the people. All transactions are recorded on a public ledger called the blockchain. This technology is incredibly secure and transparent. Think of the blockchain as a digital ledger that's constantly being updated and verified by thousands of computers worldwide. This makes it virtually impossible to hack or manipulate. With Bitcoin, you're in control of your money. No more relying on third parties or worrying about bank failures. Your money, your rules. Section 5. The halving effect. Less is more. Every 4 years or so, something special happens in the Bitcoin world, a halving. This means the rate at which new Bitcoins are created is cut in half. Why is this a big deal? Because it reduces supply, which can lead to price increases. Remember, scarcity drives value. We've already had 4 halvings, and each time, Bitcoin's price has gone up significantly in the months following. The next halving is just around the corner. This event has the potential to send Bitcoin's price to new all-time highs. From Wall Street to Main Street, Bitcoin gains traction. Bitcoin, the digital currency that started as a niche interest among tech enthusiasts, is now making waves across the financial world. What was once considered a speculative asset is now being taken seriously by major players in the industry. Bitcoin isn't just for tech geeks and early adopters anymore, it's gone mainstream. Institutions are taking notice. From hedge funds to pension plans, everyone is looking at Bitcoin as a viable investment. The digital currency is being discussed in boardrooms and financial planning sessions across the globe. Wall Street is getting involved. Financial analysts are now including Bitcoin in their market reports. And traders are actively buying and selling Bitcoin on major exchanges. The New York Stock Exchange has even started to list Bitcoin-related financial products, making it easier for traditional investors to get in on the action. Major companies like Tesla and MicroStrategy have added Bitcoin to their balance sheets. This move has not only validated Bitcoin as a legitimate asset, but has also encouraged other corporations to consider doing the same. These companies see Bitcoin as a hedge against inflation and a way to diversify their holdings. Exchange-traded funds, or ETFs, have made it easier than ever for everyday investors to get exposure to Bitcoin. These financial products allow people to invest in Bitcoin without having to deal with the complexities of buying and storing the digital currency themselves. ETFs have democratized Bitcoin investment, making it accessible to a broader audience. Even governments are coming around. While some countries were initially skeptical or outright hostile towards Bitcoin, many are now recognizing its potential. Governments are exploring ways to regulate and integrate Bitcoin into their financial systems. This shift in attitude is paving the way for broader acceptance and use of digital currencies. Regulations are becoming more clear and favorable in many parts of the world. Clearer regulations provide a safer environment for investors and businesses to operate in the Bitcoin space. Legal frameworks are being established to protect consumers and ensure the integrity of the market. This regulatory clarity is crucial for the continued growth and adoption of Bitcoin. This growing adoption is a sign that Bitcoin is here to stay. From retail stores accepting Bitcoin payments to Bitcoin ATMs popping up in cities worldwide, the infrastructure supporting Bitcoin is expanding rapidly. Bitcoin mining farms are also becoming more prevalent, contributing to the security and stability of the network. It's becoming a legitimate asset class, recognized and embraced by institutions and individuals alike. Financial advisors are now recommending Bitcoin as part of a diversified investment portfolio. Institutional investors are holding Bitcoin as a long-term asset. The digital currency is no longer a fringe investment. It has earned its place in the financial mainstream. Navigating volatility, managing risk in Bitcoin. Let's be real, Bitcoin is volatile. Prices can swing up and down dramatically in short periods. This can be nerve-wracking for some investors, but remember, volatility is a part of any emerging market. The key is to manage your risk. Never invest more than you can afford to lose. This is rule number one in any investment, especially with Bitcoin. Diversify your portfolio. Don't put all your eggs in one basket. Invest in a mix of assets to spread your risk. Ready to start your Bitcoin journey? Check out the Binance trading platform, the world's largest cryptocurrency exchange. It's a great way to buy, sell, and hold Bitcoin securely. You can trade hundreds of cryptocurrencies easily. Binance platform offers crypto spot, futures, and margin trading for all levels. You can also earn passive income with Binance staking and savings. And here's a bonus. Use our referral link and get a $100 bonus when you deposit $100. Disclaimer: your financial journey, your decisions. This essay is for educational purposes only. It is not financial advice. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Are you investing in Bitcoin right now? Comment below and let's discuss. Make sure to like, subscribe, and turn on notifications so you don't miss the latest crypto updates. The crypto world is evolving fast. Stay smart, stay informed, and I'll see you in the next video.